A recent statement from a top advisor of Vladimir Putin at the Eastern Economic Forum just turned a lot of heads in the global financial world.
Всех куда? В криптовалютное облако. Со временем, когда часть госдолга США будет размещена в стейблкоинах, США обесценит этот долг.
What he said? That the United States might be planning to use stablecoins to erase its $37 trillion debt. Sound like conspiracy theory? Maybe, but he's not the only one suggesting something along these lines. Even Michael Saylor, the billionaire behind Strategy, advised Trump to sell all U.S. gold. Is the U.S. really planning to erase its debt through crypto? And more importantly, what does it mean for your wallet? Debt devaluation isn't new. Ancient Rome used to literally shave silver off their coins to pay their debts. The US does something similar today, just with inflation. Here's a simple way to think about it. If there's only one $100 bill in the world, and you borrow it, you owe exactly that, $100. But if you print another $100, well, now there's $200 in circulation, and your debt is worth less. When the government prints more money without a matching increase in goods and services, inflation kicks in. The dollars you owe are worth less. So technically, you pay back your debt with weaker dollars. And since the US dollar is the world's reserve currency, no other country can pull this off the way we can. This is the real reason your groceries, gas, and rent keep going up. When the US devalues its debt, your dollars lose buying power. And after COVID, we saw this on steroids. But here's the smart move. When inflation hits, extra cash flows into assets, real estate, stocks, Bitcoin. That's why those prices spike. It's not that the assets are gaining value, it's that your money is losing value. You can either struggle to keep up or start playing the same game. Put a piece of your paycheck into something that holds value when the dollar doesn't. So what does this have to do with stablecoins? Stablecoins are digital tokens pegged to the US dollar, usually backed by US Treasury. If people around the world hold these coins, they're indirectly holding US debt. Now imagine the US devalues the dollar again. The impact isn't just domestic, it's global. Everyone holding these stablecoins feels it. It's like exporting inflation. And because stablecoins are often used by private companies, it feels less political, less centralized. But it's still US dollar based, and that comes with all the baggage. This is why countries are stocking up on gold. They don't trust the dollar or stablecoins backed by it. The US hasn't officially said it's using crypto to manage debt, but some moves hint at it. Take Michael Saylor. His company holds billions in Bitcoin. He proposed that the US buy Bitcoin through corporate proxies instead of outright. The government just took a 10% stake in Intel for AI strategy. What if crypto's next? Whether or not this is a master plan, the outcome is real. The dollar keeps getting weaker. Your cost of living keeps going up, and assets keep rising. This is your call to adventure. You can stay in the ordinary world, hoping prices come back down, or you can cross that threshold and start putting even a small amount into assets that aren't based on dollars. That might mean buying your first fractional share of Bitcoin, or starting a Roth IRA with index funds, or getting educated about stablecoins. Remember, you're the hero of your financial life, not the Fed, not your job. If you found this helpful, hit like and subscribe, and share it with someone who needs to hear it. And let me know in the comments, do you think the US is trying to use stablecoins to manage its debt?